Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The markets were relatively strong against the US dollar, which tumbled to a low around 104.90 following the US job report, which came in lower, missing the forecast of 178,000 jobs and added 150,000 jobs. This put a weakness in the dollar and market surged and now looks for the Australian dollar, since clearing the 60-day moving average, to the 65-cent handle. Reassess. Beyond there, could see further scope up towards 66 cents. From a broader aspect, the market is relatively firm after 3 strong days of bullish movements. Could see the gains and clear that 65.40 area. Looking onto the euro, the market was stronger and cleared the 107 level and now puts a further target towards 109. I feel the market could actually see a little bit of a pause there, but nevertheless the technicals are stronger and expects any pullback to remain shallow. All eyes will be on this week's 2 scheduled speeches from Fed Powell, so keep an eye on that, which could deliver a little bit more turbulence. The dollar yen into the 3rd consecutive day tumbles and now looks towards a region of 149 lows, and a break there could even see further scope towards 147.5 down towards the region of 144.5. Technicals are weak and the bears are pretty much in control now as they navigate lower. Any upside attempts should be contained around that topside level of 150. Sterling also very strong right across the board against its crosses, and therefore you can see the market is now reached sort of close to 124. I feel there is still room to the upside and could extend up towards 125. Any pullback likely to be shallow for the start of this week. You may find support around the lows of 123. As the rest of the markets show pretty much whipsaw price action, we can see gold was somewhat consolidated and therefore holds above the key level of 1,977. Still, I feel the market can actually take further guidance to the downside, and a break of 1,977 looks towards 1,950 as preferred. Any upside attempts? Well, it's demonstrated that 2,000 level is somewhat fine in supply and no doubt will continue. Wrapping up with oil, well, the market's been whipsawed as with bulls and bears battle it out. Nevertheless, couldn't get above that high as $82 a barrel. Posted an engulfing candle. Does put a little bit more emphasis on the downside with the RSI rejecting the midway point twice at 50. Therefore, could see the move down towards the region of $78 a barrel for the start of this week, but may find a bounce from there and look eventually back towards the region of $83. So I'm not too bearish, but I feel there is a weaker start to the Monday session, and look towards that base before seeing a bounce. Well, that's a wrap. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoyed a great start to the new week.